All right. So exercise 1-13. Ming Chen began a professional practice on June 1st and plans to prepare financial statements at the end of each month. During June, Ming Chen, the owner, completed these transactions. So what we're doing is we are recording these. Good morning. Right? And we're recording them based on the accounting equation. So assets equal liabilities plus owner's equity. Yes? And this is exercise 1-13. Now, we have how many transactions here? We have letters A through J. And as we go along, we'll figure out what assets we're dealing with and what, et cetera, et cetera. So letter A, owner invested $60,000 cash in the company along with equipment that had a $15,000 market value. So I want you to tell me what increases or what decreases, right? Owner invested $60,000 cash in company along with the equipment that had a $15,000 market value. Assets
Increase
you have the amount, but assets increase, yes,
15,000.
just 15,000.
I'm sorry, 75,000. So 15,000
So
in office equipment.
what are the two? One is office equipment and one is cash, right?
Right.
So we got cash, we have office equipment, and you said cash increases by
60,000.
office supplies is how much?
15.
And what else happened?
Owner equity goes up by 60,000. 75,000.
What part of owner's equity? What's the account called?
Capital.
Capital? M-Chin Capital. So $75,000.
Yes.
All right. What's the what is this? A. B. B says the company paid $1,500 cash for rent of office space for the month. What increases? What decreases?
Accounts payable. Increase.
Accounts payable.
Cash.
Cash decrease, and what else happened? Expenses did what? Well, we're not going to list those out because we don't have enough room, so we're just going to say expenses. But what does it do? Cash decreases by $1,500, and expenses increase by $1,500. With me so far? Everybody with us so far? Okay. No, somebody say no? Did anybody say no? Okay. Letter C, the company purchased $10,000 of additional equipment on credit. Payment due within 30 days. Now, what is useless about that problem? What if, yeah, that's irrelevant information, right? Because all you care about is what? What they purchased for it, right? So, what increases, what decreases?
Accounts payable increase.
Accounts payable increases by
8,000.
8,000.
10,000. I'm sorry. Paid 10,000.
Okay, what else happens?
Cash decrease, office equipment increased by 10,000.
Office equipment increased by 10,000? Cause you gained that, right? You purchased it? D, the company completed work for a client and immediately collected the $2,500 cash earned. What happens?
Cash assets go up by 2,500.
Cash increases by 2,500 and what else? Revenue increases by 2,500?
Yes.
Okay. Letter E. The company completed work for a client and sent a bill for $8,000 to be received within 30 days. What's irrelevant?
The amount of days when it can be received.
To be received in 30 days? So if they completed work and they sent the client a bill, what increases?
Accounts receivable.
Accounts receivable, because they plan to receive that, correct?
Right, and revenue,
And revenue. How much was it?
80,000.
Okay, letter F, as in Frank. The company purchased additional equipment for $6,000 cash. What happened?
Cash decreased by 6,000.
Cash decreases by 6,000.
Office equipment increased by 6,000.
So cash increases by 6,000 and decreases by 6,000, and office equipment increases by 6,000. G. The company paid an assistant $3,000 cash as wages for the month.
Cash decreased by 3,000.
Cash decreases by 3,000,
Expenses increased by 3,000.
and expenses, which would be wage expense, increases by 3,000. H. The company collected $5,000 cash as a partial payment for the amount owed by the client transaction E. Cash increases by 5,000. What else?
Account receivable decreases by 5,000.
Good, good. So cash increases by 5, and accounts receivable decreases by 5,000. Does everybody see what we did there? Okay, so let's explain it. Back in transaction E, the company
They bill the client for services.
thank you, because I can't mind it by numbers and not by letters. Okay, so they completed work for a client. They sent that bill for 8,000, right? They just collected some of that money on that bill. So when you created that bill, you told me to put 8,000 here in accounts receivable, right? Now that they're paying it, you don't increase it. What do?
Decrease.
You decrease it. Basically, you're saying they no longer owe you 8,000, but they now owe you what? 3,000. So everybody's clear about that? Sure? Okay. The company paid $10,000 cash to settle the liability created in transaction C. So what happened? How much? Negative 10,000 there. What else happens? Accounts payable decreases by 10,000 because they are paying off what they incurred back in transaction C. Does everybody understand?
Yeah.
Okay. Accounts payable. Cash decreased because they're paying what they owe. Paying out of cash. Accounts payable decreased because they put that stuff on credit back in transaction C. Go back and read transaction C. Read it to me, and what does it say?
The company purchased $10,000 of additional equipment on credit.
So if I didn't explain this last week, I'll explain this now. Anytime a transaction says on credit, it means payable, okay? If a transaction, say they bill a client or to be received later, that's accounts receivable. When you owe someone, that's accounts payable. When someone owes you, that's accounts receivable. Everybody understand? Yes, ma'am.
Why do I want to keep, for the letter H, I keep wanting to add that in as revenue some type of way.
Why?
Cash, I don't know,
Read it. Read letter E.
the, H.
H. Okay, read letter H.
$5,000 cash.
Uh-huh.
Why can't that be considered revenue too?
You already did it.
In the 8,000?
Read letter H in its entirety.
We expected 5,000 cash, like the payment, for the amount owed by the client in transaction fee.
Go back to E and read E to me.
The company completed work for clients and bill for 8,000 to be received. within
So-
30 days.
Look up here. E is where you actually recognize the revenue. Okay? Down here is where they're just paying you what you've been owed from what you did back in E. So you don't count revenue 2 times. That's inflating revenue. You don't want to do that. You already counted it in full. Now they still owe you. So in H, they came and paid you partial payment on what you had already reported in revenue. Okay, let's do it this way. You got a mortgage, $400,000, right? When they originate your loan and give you the $400,000 for the house, they recognize revenue then because you have the home, right? You're taking ownership of the home, and you agreed to pay them back. So at that point, you're making mortgage payments, right? They don't recognize that $400,000 every time you make a mortgage payment over 30 years, right? They just take what you owe them in full and they deduct from your principal amount. This is the same situation. The client owes you a full $8,000. You recognize the full $8,000 for revenue because that's exactly what you earned. It's just taking the client longer to pay you what they owe you. That's really all that it is. So you don't have to, conceptualize it too much. It's just simply you record revenue when it's earned. It goes back to that principle. Doesn't matter when you get the cash for it. But as you start getting cash for it, you deduct it from their balance. That's all they're saying. Everybody's clear about that? Yes? Okay. Last one. J. The owner withdrew $1,000 cash from the company for personal use. What happened? What decreases? Cash decreases by 1,000, and what happens? Speak louder. Withdrawal. It would increase by 1,000. And who is confused about why we increase it and not decrease it? Raise your hand. Okay. So you have to treat this the same way you do expenses. Think about your light bill at home. Do you actually record in your bank account that you have that light bill way before you get it? No, because you have no idea what your light bill is going to be, right? Technically. But if you had to conceptualize it, you don't go to Georgia Power and say, here's some money. I don't know what my bill's going to be, but I'm going to give you $500 anyway. I don't think anybody does that, right? Mm-hmm. So withdrawal is the same way. Did it exist before this happened? Did anything exist in the withdrawal account before this happened? No. So it's an increase to it. Does that make sense? Same thing with expenses. Do you have a utility expense until you get a utility bill? No. You can't say, I have a utility expense, you have no bill. Correct? Same thing with withdrawals. We cannot recognize withdrawals until that owner actually went and took money out. So this is why it's an increase. And to take it a little further,
It's an increase in what?
withdrawals. I'll tell you, yes. owner withdrawals, call it whichever you like. The way that the equation goes, if assets equal liabilities plus owner's equity, when you get down this line, you're going to add, you're going to take capital, take out withdrawals, add revenue, deduct expenses. Everybody's clear about that? So, with that being said, help me balance this out. Start with cash first. That's why the calculators come in handy. So you don't have to do all of this in your head, right?
For cash?
I just need cash. What'd you get? Does everybody agree? So everybody doesn't agree.
Am I adding up all the cash that was increased, or do I add up what was taken out?
Okay, listen to this. Do not overthink this, people, because it's really not that hard. Everybody pay attention up here. Anywhere you don't see a negative is a positive number. 60,000 minus 1,500 plus 2,500 minus 6,000 minus 3,000 plus 5,000 minus 10,000 minus 1,000. I heard 246,000. Is that what you agree on?
You said plus 10,000.
Minus 10,000.
Look at this column only. That's minus 10,000.
What about the 60,000 and the 15,000?
15 is in different colors.
Where do you see? Yes, 60,000 minus 50. We are only in cash. Only in cash right now. Everybody sees that? 46,000 for the cash account. What about office equipment? This is all that you're concerned about. 15,000 plus 10,000 plus 6,000 equals 31,000. Accounts receivable. 3,000, right? 8,000 minus 5,000. Does everybody see that? Okay. Accounts payable. 0. 10,000 cancels out 10,000. Capital. What you got? 76,000, because that's 75,000 plus 1,000. No. This goes in withdrawals, right?
So that's 74,000.
74?
Did you say that? Well, no, 75,000.
It's just 75,000. I have to write that 1,000 really tiny over here. 75,000. How much is withdrawals? 1,000. Revenue? 2,500 plus 8,000? 10,500. And expenses. Now, this is what I want you to tell me. Who remembers last week when I talked about the financial statements? Who wrote it down or took notes? There's very few of you. Okay, so last week I told you that the income statement had what on it?
That's it.
Who?
Revenues and expenses.
Revenues and expenses, which equal out to?
10,500.
That's not what I'm asking.
No.
Revenues and expenses equal what? Net income or
Net loss.
net loss. So, looking up there, you have revenue and expenses, correct? What's my net income?
6,000 minus 10,000 minus
6,000.
Because how do we get net income?
revenue minus expenses.
Revenues minus expenses. So, 10,500 minus 4,500.
That's 6,000.
So we have a net income of 6,000. Had that number been negative, it would have been considered what? Net loss, not net income. We clear about that problem? No? Maybe?
I got it.
You said, to get that, you got to say revenue minus the expense, and that gives you the net income.
Correct. What time are we working on? So by 10:30, we would be done doing these exercises, and we need to move on to chapter 2. Mm. Yes, ma'am.
The homework,
Uh-huh.
after you have exhausted your leave,
Uh-huh.
check my work
Uh-huh.
chances. Is there a way to, go back to the last one, the last
The last
picture?
check my work.
The last check, yeah.
My advice to you all, don't exhaust those uses if you really don't need to. So, after you've used them, it might make sense to just print them. If you want something to refer back to, but it will not show you previous check my work. And yes, that does suck.
And if you don't, if all the spaces that are on, like some of these, income statements and statements of equity, all the spaces, do we have to use all the spaces that they give us?
If you want your grade, yeah.
Well, sometimes, like, what I found is that, or I haven't actually checked it yet, but I did one of them, and I didn't have to use all the spaces.
That don't sound right. Whatever space they give you, they're gonna answer. That's part of your grade. So they wouldn't give you extra spaces if they didn't want you to fill them out. Is what I'm trying to say. Yeah, I'll overthink the stuff if you want to. You're gonna spend 4 hours on one assignment. Let me see what.
Well, I have to actually find it, I don't know right off.
So take time, show me that after class. Exercise 1-15. Exercise 1-15.
Oh, well,
Page 38.
you can't really tell, but this space was open, like it was something that should have been there.
It may not be up under liabilities, but you do have something in that line. That's why you see that. So it's for account receivable. You would have nothing up under liabilities for this. One side of this balance sheet is assets, the other side is liabilities and equity. Right, what you have any of these amounts on this side is supposed to be in two sides, which is what we're about to go through now. What I'm telling you is simply this. This is for accounts receivable. Why would you need anything over here?
That might not be perfect,
Okay.
I'll look for another one.
All right, so exercise 1-15. They've already given you the numbers. What are we doing for this problem? We are preparing the income statement, statement of owner's equity, and then the balance sheet. So on October 1st, Ebony Ernst, page 38. Ebony Ernst organized Ernst Consulting on October 3rd. The owner contributed $84,000 in assets to launch the business. On October 31st, the company's records show the following items and amounts. Use this information to prepare an October income statement for the business. Now, what goes on the income statement? What did you just tell me? And all of this will be emailed to you in a PDF, by the way, of what we went over today. So expenses and revenue. So if that's the only thing that's on the income statement, you can pretty much see from what they've given you, the only things you need to pull out, right? What do you need to pull out from that list of things that they've given you? What is it? Fees earned? Uh-huh. That's revenue. Rent expense, salaries expense, telephone, miscellaneous. Missing anything else? I don't think you are. You just told me revenue and all the expenses, right? No? Full participation, everybody facing me. What did you tell me is on this statement?
Revenues and expenses.
And out of what they've given you, what should you only be concerned about for that statement? Which are?
Net income.
We ain't got net income yet.
Down.
Consultant fees earned and everything under it, right? So starting off with revenues, consultant fees earned, how much? What's next? Expenses. And you had rent expense was the first one? How much?
3,500.
3,500, 3,550. Next, salaries expense. How much?
7,000.
7,000. Next,
Telephone expense.
telephone expense. How much?
760.
760. Next, miscellaneous. How much?
500.
Is that it?
Yes.
Total expenses equal what? Add that up. Total expenses only. How much? 11,890. Now, if we brought all of this down, 14,000 minus 11,890 equals what? 2,110.
6,000.
Wait a minute.
6,000.
2,000.
What's the amount, folks? Net income or net loss? Net income. That was relatively simple, right? Yes? Does everybody have this one?
Yeah, also.
We good?
We did 11,000 minus.
We took total expenses and subtracted it from what?
14,000.
Total revenues to get net income or net loss. In this case, it's net income. Yes, ma'am.
Anything you purchase, that's considered investing into the company. No.
It depends. It depends on what you purchase, but the best way to look at it is that anything that the owner brings in is capital. Anything that is purchased for the business, such as equipment and things of that nature, asset.
Equipment, office supplies.
Anything that's an asset. So anything that they purchase for use, active use for the company is considered to be an asset. All right?
Okay, well, the question I just asked from this one about the spaces, the extra spaces, is what? So, this is for investment activity. I have.
So you had no.
The two extra spaces in here that I could use to put something in. So I'll have like an office.
Yeah. I got
gonna depend on whether or not, so this is truly gonna be a test of whether or not you know if you had something from your activity.
Right,
Do you have more activities to add?
if they're all in here, but I'm just wanna make sure that even if I did add one more, there's still nothing else to put in that last one.
They're leaving it up to your discretion. So they're giving you enough space to do what you need to do. You just can't go below this bottom line for this set of activities.
So we could use all the spaces, or we might not use all the spaces.
Might not.
Okay.
And it may be all of one that may not be needed.
Okay.
But that's where you need to use judgment. I mean, cash inflows and outflows can only come from however many areas. They're not gonna overload you with a bunch. So if you feel confident that you listed enough, then leave it like that and move on to the next section. But if you feel there are more to add, then I wouldn't hit check my work until you've done everything, you've utilized everything that you had. Does that make sense? So if you utilize everything that they gave you in the project, you have no more numbers and nothing else to use, you've done all you can do. Then don't use the extra money. But if you still got stuff that's not recorded, then obviously you don't need
So
to.
that's what I wanted to know before I even hit check my work.
Don't ever, let me just tell y'all something. Any problem you do on homework, do it to its entirety before you start hitting that check my work stuff. Because if you only get 3 chances per question, that might be a really long question that you're doing. It might have 4 parts to it, and you only did 1, so you wasted a check my work on 1 out of 4 parts for 1 problem. That doesn't make sense. Go through it in its entirety and exhaust all of your resources in your brain until you can't do any more. Then you get check my work. Because you're limited on how many you get.
Just because we have the spaces that we didn't have to use.
If you know you've done everything else, correct. Correct. They're just giving you enough space just in case. Because I've seen students sometimes think this goes here and they use all the spaces. Instead of putting it in another area where it should have been.
And also what I found is if you have a space and it's open and you don't put anything in it,
Mhm.
it's not gonna mark it correct. Or it's
It'll
not gonna mark
mark it incorrect.
or it's not gonna mark it wrong. If
It truly is incorrect, it'll mark it incorrect. If it doesn't mark it at all, guess what? You weren't supposed to put anything in those spaces.
When you hit check my work, it'll tell you if your, project is complete or not.
And it'll tell you if the blank spaces are wrong. So if you got an X in those blank spaces, what does that tell you? Put something in it.
It didn't happen yesterday when I did it, but okay.
So what does that mean? If it didn't happen yesterday when you did that,
But
nothing goes
but
in
then
those
when I went
spaces.
back and fixed everything else, when I went back and fixed some other things, I found that I should have put something in because it did mark it wrong at that time, but it didn't mark it wrong the first time. But it marked it wrong the
Okay, now
second
you're
time.
confusing me.
It didn't mark it wrong the first time, but it marked it wrong the second time.
That doesn't make sense.
I think that's what it.
But, you know, again, like I said, I know for a fact, because we've been using Connect for years at this point. If it marks it wrong when you hit check my work, you were supposed to have something there. If it doesn't mark it at all, meaning it just left it blank, nothing goes there. It will mark it wrong if you have nothing chosen, because it wants you to realize something needs to go there. It's kind of like when you do little problems like what we've been doing and you leave spaces blank, it will mark them wrong, even if you have nothing in there, because it's trying to tell you, you need to put something there. Does that make sense? All right, next problem was exercise 1-16, which is asking us to complete what statement? Statement of owner's equity, using the same information from the previous problem. What goes on the statement of owner's equity?
Net income or loss, owner investments or withdrawals.
So, what do we start with? This is why it's so important to complete these statements in the order in which I told you last week. Because you need something from the previous statement in order to complete the next statement. So, what do we start with for the statement of owner's equity?
Net income.
Net income. And what did you have as net income? What's next? Now, I'm basically going off of what you just told me. Are you absolutely correct? That's how it starts? You said no? What do we start with? Capital. Did everybody hear her? What's beginning capital?
Zero.
What was beginning capital?
Zero.
Look, folks, give me the right number. I can't keep
84,000.
erasing. Look in your book at the problem that is in front of you.
84,000.
84,000 is beginning capital. Are you absolutely sure?
For the cash.
What is beginning capital?
Zero.
Zero. And why do we say zero?
Just started the business first.
Not necessarily that you just started the business, but does it give you a beginning capital amount?
No.
No. So you have to presume that it is what? Zero. Now what do? Add investments, which were how much? Add what else? Do you add withdrawals? So you add investments, net income, and what else? Is that it? How much is that? 84,000 plus 2,110. 86,110. And what do you subtract? How much were they? 2,000? Is that all that you have to subtract? Maybe, yes. So what's ending capital? How much is it? 84,000? Everybody clear about what we did there? I need y'all to speak to me. I do not talk to walls. Yes?
Yes.
Okay.
No.
What's-
I'm not, I'm just a little off on one thing.
Okay.
Okay, we started out with the capital because it didn't give it to us, so we.
Well, you always start out with capital for this statement. Yes.
Okay, and will it list the capital sometimes when it
If
takes
it listed, you use it. If it does not, you assume what?
zero? That is no capital. And then from there, then I go to the investment part.
Add investments, add net income, subtract withdrawals.
Those are the only two that I look for.
Three.
Doing the,
3. The only thing that is on these statements, this statement, is capital, net income, investments, and withdrawals. Because all of that falls under what category? Equity. Understood? Okay. Lastly, balance sheet. What's on the balance sheet? And this is exercise 1-17. What's on the balance sheet? Assets, liabilities, and equity, which is also a part of what? The accounting equation. So, how do we start off a balance sheet?
Assets plus liability. Assets plus liability.
So we start off with assets. What assets are listed for you? What do you have? You have cash, and you always list assets in order of liquidity. Who knows what I mean by liquidity?
What it means to be converted into cash.
You want to say something? Yeah.
No, I mean, liquidity is what can be utilized quickest.
So you both said the same thing. When we say list them in order of liquidity, we mean how quick can they be converted to cash? Cash doesn't need to be converted. It's already there, right? So that's the most liquid, or what can be used first, right? So we have cash. How much?
11,000.
11,000 even?
No,
So 11,000.
11,360.
11,360. What's the next asset you have?
Account
Accounts receivable. How much is it?
14,000.
Even?
Yes.
What's next?
Office supplies.
Office supplies for how much?
3,250.
Next.
Land.
Is that liquid?
No.
Most liquid?
Office equipment.
Office equipment.
Office equipment. How much?
18,000.
Next. Land. 46,000. Are there any other assets? No? Total these up for me. Total that up for me and give me an amount. $92,610. Now, this is what I want you to realize. Ultimately, when we list liabilities and equity on that other side, we are trying to get to what amount? This same amount, right? So next you have liabilities, correct? What liabilities do you have? Notes payable? Accounts payable? How much is it?
8,500.
Okay, what's next? Anything else? No? Okay, equity. What do you have for equity? Who just said capital? Capital. Why do you say capital?
Why does it happen?
Mm-hmm. You are correct, but I just want everybody to understand, because somebody said investments and some other stuff, we don't do that. Why do you think we do not list investments and withdrawals and all of that? Who can tell me?
Investment have the equity.
It's all equity,
How much money?
but what did we do with it already? We put it where? On what statement? Statement of owner's equity. So you did all of that so you could get an ending what balance?
Net.
On your statement of owner's equity, you did that statement so you could get an ending capital balance, which you bring where? Over to this statement, which is how much? 84,110, correct? So that means total liabilities plus owner's equity equals what? 92,000. Are we accurate?
Yes.
We do what?
Balance.
Balance. That is the main goal of that statement. If for whatever reason you have a problem where it tells you to do the balance sheet and you didn't do that other statement before then, it is okay in that instance to list under equity investments minus withdrawals. Do we understand? Only in that situation. But if it's a situation where you completed the equity statement prior to this balance sheet, don't list all that stuff on that balance sheet. There's no point because you have an ending capital balance. Do we understand? Maybe?
When you haven't done the owner equity, don't list it in there.
Correct. Just what she said. List withdrawals and investments when you have not done a statement of owner's equity.
It's still easier to do all that first, right? Get the balance sheet.
No, it's easier, yes, to do an equity statement first because that's the order in which they go, correct? But you may have a problem that may say, complete the balance sheet, and it may give you the withdrawal amount, and it may give you the investments amount. So you need to know what to do with those things. when you see it. Cause not all of it, you okay?
Yes, I just, doing this, I just did something right on the board, and I'm like, oh.
Hey.
You got me to-
I'm happy for you to get homework right, cause the last thing I need is 15 emails. Okay. I'm so happy for you to get that right.
I was up all night long trying to get that right.
Really?
Yes.
I wouldn't have done that, but you know, whatever works. But I'm glad you got it right. So we understand this, right? So we can put all that up and we can move on to chapter 2 because you're gonna be able to do your homework, no problem? Yes?
And I got
And
all
you're
the-
gonna get these notes via email
Okay.
in PDF, right?
Alright.
So you can refer back?
Yep.
Okay.